The Paul Merriman 4-fund portfolio is a simple equal-weighted equities portfolio that tilts towards small caps and value stocks. Here we'll take a look at its components, performance, and the best ETFs to use in its construction. The Paul Merriman 4-fund portfolio, as the name suggests, is a lazy portfolio designed by Paul Merriman that utilizes equal weightings of 4 assets. The portfolio is 100% stocks and is thus considered more risky than his ultimate buy and hold portfolio. To design the portfolio, Merriman looked within stocks at the styles and cap sizes that have paid a risk premium historically. Basically, the portfolio places large bets on the well-established size and value factor premia, tilting heavily to small cap stocks and value stocks to hopefully deliver market outperformance over the long term. The research is sound and the concept is simple. Unfortunately, the size and value factors suffered for the decade 2010 to 2020, lagging the market. I don't employ or advise market timing, but AQR maintains that value is still basically the cheapest it's ever been right now relative to history, suggesting that now may actually be the worst time to give up on the factor and that it's due for a comeback. Value stocks beat growth stocks and small stocks beat large stocks in 2021 and 2022, so that comeback may indeed be happening. Merriman suggests that this 4-fund portfolio can indeed provide a comeback after all the recent market volatility. Note again though that this is a high-risk portfolio that is likely better suited for investors with a high risk tolerance and a long time horizon. The Paul Merriman 4-fund portfolio looks like this: 25% S&P 500, 25% large cap value, 25% small cap blend, and 25% small cap value. Just as with his ultimate buy and hold portfolio, Merriman walks us through each building block of the portfolio. The S&P 500 is considered to be a sufficient proxy for the US stock market and is a good diversified workhorse. It provides a solid foundation for the portfolio across large cap growth and value stocks. Large cap value stocks have beaten large cap growth stocks historically, so the second building block is to tilt large cap value with 25%. This is again known as the value factor premium. Small stocks have beaten large stocks historically, presumably because investors demand higher returns for riskier, more volatile small cap stocks compared to large cap stocks. This is known as the size factor premium. Small cap value stocks have beaten small cap growth stocks historically, so we're tilting small cap value with 25%. This enhances exposure to both the size and value factor premium. My own personal portfolio tilts toward both of these factors. Going back to 1928, the S&P 500 index, as a proxy for US large cap blend, has had a compound annualized return of 10.2% through 2022. For large cap value, that's 11.2%. For small cap stocks, that's 12.1%. For small cap value, that's 13.4%. And for those four combined, it's 11.9%. Here's a performance backtest of the Merriman 4-fund portfolio from 1972 through 2022 using live fund data. It has smoked the S&P 500 historically, which again we would expect over the long term, even on a risk-adjusted basis despite its greater volatility. Using Merriman's best-in-class ETFs, we can construct the Paul Merriman 4-fund portfolio like this: VOO at 25%, RPV at 25%, IJR at 25%, and AVUV at 25%. I'll include a link to invest in this portfolio in the description. If you enjoyed this video, be sure to check out my breakdown of Merriman's more complex ultimate buy and hold portfolio here. What do you think of Merriman's 4-fund portfolio? Let me know in the comments. Thanks for watching. I am long VOO and AVUV in my own portfolio.